Welcome to Trading Nation. I'm Michelle Caruso-Cabrera, and crude oil is hitting its highest level since 2014 this week. And our next guest says it could be sending a major warning to the bond market. Joining us is Charlie Bilello. He is the Director of Research at Pension Partners. Charlie, good to see you. You brought along 3 charts for our viewers. First is crude oil versus inflation expectations. What does it tell us?
Yeah, so we have this interesting phenomenon where crude oil is highly correlated to the direction of inflation expectations. So if we're looking at the chart here, we have crude oil, a huge decline from 2014 all the way down to 2016. And at the same time, inflation expectations are plummeting. Now, during that period, you have extremely easy central bank policies. The fears were deflation. You had the ECB go negative on interest rates, the Bank of Japan go negative on interest rates, and you had the Fed very reluctant to hike rates. Now, since then, we have a 150% advance in crude oil, and as you can see, inflation expectations are starting to push back up. Now, the Fed is hiking more aggressively, expected to hike 3 or 4 times this year, and now we're talking about other central banks joining as well, the UK, Canada. So the environment is changing, and I think this is an important relationship to watch going forward.
The next chart you have is that of the 10-year. I assume the yield on the 10-year U.S. government bond.
Yeah, so what we have here is a long-term chart of the 10-year Treasury bond, and you could see
the yield on it.
The yield on the, exactly. You could see it just a long downtrend from the early 1980s when it peaked all the way to when it hit its all-time low back in 2016. Now, what's interesting today is a lot of investors seem to be fearing a rise in interest rates. That seems to be the major concern today. But if we look back in history, there's been some inflection points back in 1987, back in 2000, and back in 2007, where you had yields failing to break higher. So if we draw a trend line down here, you can see that yields failed to break higher at all 3 of those inflection points. It ended up being a bad thing for the equity market. Now, conversely, at the bottom points on the chart, 1998 and 2003 and 2008, yields failed to break lower on a trend line, and you had equities then take off as interest rates pushed higher. So an interesting thing here, I'd say, if you're worried about higher interest rates and you're hoping that they go back down, be careful what you wish for, because it may mean an economy slipping into a recession or some turmoil in the markets.
Last chart you brought is the CRB Commodities Index.
Yeah, so this is an interesting one, and it really has to do with the environment we've been experiencing really for the last 5 to 6 years, which is most similar to the period of the 1990s. So this is a chart on the top panel is the Commodities Index, the CRB Index, relative to the S&P 500. As you can see, you had this long downtrend from 1995 to around 1999, a great period for equities. You had low inflation, you had steady economic growth, great period for equities. Then you have the relationship flip, and you start seeing commodities outperform, not so good for equities over the last few years from 2000 to 2002. We have a similar relationship here from about 2012 through the end of last year, commodities pushing lower. And just recently, if we're looking at a 10-month rate of change, which is similar to a 200-day moving average, we're seeing commodities just start to outperform equities. So the question for investors is this going to be a sea change in markets where you have more inflationary behavior, more difficult markets for equities, more corrections, and higher volatility to come?
When are we going to know the answer?
Hey, I wish I knew, right? We only know in hindsight.
Okay, got it. Charlie, thank you. Charlie Bilello of Pension Partners, thanks for joining us today. And thank you for watching Trading Nation. I'm Michelle Caruso-Cabrera. See you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.